The Vanguard Dividend Growth Fund, denoted by the ticker symbol VDIGX, stands as a prominent choice for investors seeking a balance between capital appreciation and a consistent income stream through dividends. Managed by Vanguard, this fund is designed to invest in high-quality companies with a history of increasing dividends over time. We will delve into the features, performance, and unique attributes of the Vanguard Dividend Growth Fund. Investors can gain valuable insights into its potential as a cornerstone for a diversified and income-focused investment portfolio. But first, what is the value of a dividend growth fund? For many, they are appealing to those looking for a source of passive income in their investment strategy while not sacrificing too much capital appreciation. Today, we will be analyzing Vanguard's dividend growth funds, as well as others, to see how they stack up by their past performance and key metrics on their future success in a potential portfolio. To start, let's consider the Vanguard Dividend Growth INV, VDIGX. This fund shows a sturdy performance. By backtesting with Portfolio Visualizer, an initial balance of $10,000 would have ballooned to over $40,000, with a compound annual growth rate, SCHD, standing at 12.33%, demonstrating consistent returns. Despite this, the fund carries an expense ratio of 0.3%, which is less than Fidelity's competing fund, while also having a dividend rate of 1.68%, although competitive. Let's look deeper into the competition. The Schwab U.S. Dividend Equity ETF, SCHD, also exhibits a compelling performance, with an initial balance of $10,000 growing to over $42,000. With CAGR here is 12.74% in the same backtest. These returns are slightly higher than the Vanguard fund. Plus, the expense ratio is a mere 0.06%, much lower than the Vanguard fund. Almost five-fold less expensive. And when you look into the dividend rate of 3.46%, dwarfs Vanguard's dividend growth funds as well as Fidelity's by twofold. And speaking of Fidelity, the Fidelity Growth and Income Fund, FGRIX. This fund has a CAGR of 12.75%. Identical to the Schwab fund, but with an expense ratio of 0.58, making it the most expensive option by comparison. Coupled with a dividend rate of only 1.56%, makes it the underperformer in this test as well. In terms of dividends, the Schwab fund offers a rate of 3.56% and an impressive 12.74% annualized return. But there's something missing when we compare the results to just the S&P 500 benchmark, having a 13.89% return during the same time period. So what are the main takeaways? First, performance matters. Both the Vanguard and Fidelity funds show solid compound annual growth rates. However, the Schwab fund edges them out. But measuring raw capital appreciation, the S&P 500 benchmark takes the cake while offering a 1.45% dividend, only 0.2% away from the Vanguard Dividend Growth Fund VDIGX at nowhere near the expense ratio. Second, expense ratios are crucial. The less you pay in expenses, the more of your money works for you. Here, the Schwab fund again takes the lead, with an expense ratio only beaten by the S&P 500 benchmark from Vanguard VDIGX at 0.04%, meaning it is significantly lower than both the Vanguard and Fidelity funds' dividend growth funds. And lastly, don't overlook dividends. While all three funds offer dividends, the Schwab fund provides the highest rate. In conclusion, when choosing a dividend fund, consider multiple factors. Performance, expense ratio, and dividend rate all play a role in the success of your investment. So, scrutinize these factors closely, especially when they fund charges 0.50% for only a 0.3 to a 0.1% increase in dividends, and furthermore compromising total asset appreciation when compared to just investing in the S&P 500 with only slightly less in dividends. Considering all this information, align your investment strategies with what funds that give you the most value that line up with your goals. It's important to do your own due diligence and make an informed decisions. After all, your investment success lies in your hands, and with every piece of knowledge, your bright financial future.